to the Startup Funding Espresso. I'm Hall T. Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Startup founders raising funding will encounter a range of investors with varying levels of interest. Founders should prioritize their follow-up and focus on the investors with the greatest likelihood of making an investment with the least amount of work. A lead investor can be quite helpful, but will require substantial time and effort on the part of the founder. Budget time for the lead investor. Close the easy ones first. These are often angel investors with small checks who typically run a light diligence process. They invest $25 to $50K on average. After that comes angel groups who have a process for vetting deals. The application process can be heavy, but once it's done, the angel group process happens on a known scale. A typical angel group will invest $150K to $300K, if not more. After that comes micro VCs who typically write $150K checks on the first round. Their diligence will be more substantial. And finally, the standard venture capital fund will require a full diligence review with an initial investment of $500K. Start with the easy ones and work your way up. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.